role of accounting information plays a huge part in any and all businesses. We're going to cover some of the basics here as we look at the accounting and some of the major reports that it provides us, because without those reports, we couldn't keep track of almost anything and we lose control of the business itself. Well, accounting, by definition, is really recording, classifying, summarizing, interpreting the financial events and transactions to make certain that management can actually go back and take a look of this happened on this day. This is where we're at financially, and this is where we are long picture. And so when we look at that, it's part of it is knowing, taking a snapshot in time today, and then also a movie, so to speak, of actually the ongoing financial transactions and where you stand, especially in the area of cash and cash burn. So accounting, follows a couple of things. First of all, there's a whole series of stakeholders that are involved in looking at accounting records. They're employees, they're owners, they're creditors, they're unions, they're investors, they're the government. It really uses all of that, and people are watching. If you're a publicly traded company, the stockholders certainly have a legal right to know what's going on inside the company, or prospective stockholders, and those would not be shareholders but stakeholders. They may be interested. Employees, they want to know what's going on as well. So accounting, we follow a whole series of rules. We call it the generally accepted accounting principles, or GAAP for short. So you hear that term out there, you'll know what that is. It really is a whole series of rules and structures that we have when we talk about the aspect of what's involved in accounting. Accounting really has inputs, processing, and outputs. The inputs are accounting documents. And sometimes we don't really think of them as accounting documents. A sales document, a receipt. Well, yes, a receipt is showing the purchase or sale of a good, of something that you're buying for your company's organization. Purchasing documents, shipping documents. Even on shipping documents, we have a thing called a packing slip. A packing slip is a list of the stuff that's inside of the box. Well, you take all the stuff out, you go check, 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 all the things you have and the things you don't have, and you turn them into accounting. That is an accounting document, because they're going to take those items that came inside the box, match them to what was ordered, and then pay appropriately, because of the fact that now they have verification in accounting that this item has been ordered, brought on board, and then actually have it in their possession. Payroll records, bank records, travel records, entertainment records, just about everything you could imagine that's a record ends up as some type of input into the area of accounting. And then we turn it around and we process it. We put it into journals. The journals, then we eventually post them into ledgers for classifying, and all the accounts are summarized. So when something goes into the journal, we record it really chronologically. And then at some point in time, we take the items we receive and then we put it into by different classifications. For instance, water, electricity. They're only related because they're utilities, but you may want to classify them into your actual ledger as utilities. So that being said, they're entered as chronologically as when you receive them and pay them, and then you sit there and transfer them into journal entries, and all the counts there are summarized. And then you have a series that we call financial statements, which are the outputs. There's three major ones that you're going to have to know. You have to know them for this class. You really have to know them in the world of business, because we talk about them on a regular basis, especially if you're a shareholder or considering that whole aspect. There's a balance sheet is probably the biggest one, and then your income statement, and then your statement of cash flows. These three are the three major documents that every single company, public or private, should be producing as a result of accounting. Balance sheet, income statement, and statement of cash flows. We're going to deal with this in a much more detailed fashion, but just in an overview, we always include these three statements in your overall annual report. If you have a company that has sold stock, then you're required at least once a year to have an annual meeting to discuss what's going on and provide an annual report to your shareholders. And by the way, all three of these documents are part of your annual report. Who uses it? The government does for taxing. Yes, yes, they need the money to do whatever government does. Okay, sometimes it does what you're supposed to do, and sometimes it may do other things. Who knows? Okay, regulatory agents, they want to have a requirement of it. And then people interested, as well as the managers of the firm, to see what's going on. A lot of people that are involved with it, you have a couple things. One is the bookkeeping, and a bookkeeper plays a major role. We tend to view it as a clerical type of function, except for the fact they do an awful lot of different work. They divide the transactions into meaningful categories, post them in a record book or a computer program we call a journal, and then eventually transfer them really into the ledger. We also use a methodology called double entry bookkeeping, where you write it down in two places, and that way you write it over here, you write it over here, and then you go back and you double check it. That way you have a balance inside your system that makes certain that everything is properly done. Here kind of are the steps. Analyze the document, sales slips, travel receipts. You saw the previous list already. Record it in a journal, which is kept chronologically, and then you take everything in your journal, you post it by classification into your ledger. Then you take a trial balance, make certain all the different things line up like they're supposed to. Prepare your financial statements. Remember, there's three of them: the balance sheet, the income statement, and the statement of cash flow. And then you analyze the statements. Those are the steps. There's 6 basic steps, and they really produce those 3 documents. The ledger, the accounting book, but really almost nobody keeps books anymore. It's almost always a computer program. We take the information from the journal, we put it into the ledger, and the ledger has categories posted so you can all find the information in one account in the same place. The trial balance is a summary of all the data that you have in the account ledgers, and it ensures that everything is really all balanced the way it's supposed to be. So the role of accounting information: inputs, outputs, double entry bookkeeping, a journal held by chronology, a ledger held by topic, a trial balance, and then the critical thing are the people that really make certain it all happens, all this magic behind the scenes, is the bookkeeper, and then eventually is passed on to an accountant. Accounting information, a major part of every organization. Like it or not, it's got to be done, and it really needs to be done very well. The role of the accountant is critical in every organization. Take care.